This video is all about accounts payable, AP, in bookkeeping, what that vocabulary word means, and how it's used within the business. If this is your first time on my channel, my name is Rachel Brown. This is Realistic Bookkeeping, and this is the second video in a series on the basics of bookkeeping. There has been one video so far in this series on accounts receivable, and I will make sure that that is linked above and down below in the details of this video. I am trying to provide some really clear foundational concepts to you so that you can feel more confident in your abilities to do bookkeeping. I started bookkeeping about a year ago, and as I've learned more and more examples of how these things are used in business, I have tried to convey that to you so that it is useful and so that you can gain some confidence as I have. If you really know nothing about me, I am or was a full-time math teacher in the public school system and just recently decided to quit my full-time job. Specifically, bookkeeping has given me that freedom and that choice, and I am ever so grateful for this journey that my life has taken me on. If you have worries or concerns, I'm gonna make lots of videos in the near future about this process of leaving my full-time job and now working for myself doing bookkeeping full-time. This is not where I thought my journey was going to lead me, but I am on the ride. So join with me. We're gonna dive into accounts payable today. Don't forget, there is a download of this presentation down below, along with a link to the computer that I've been using for bookkeeping, just in case you don't have one or it's time to upgrade. This has been a really great one for me to use, as well as a link to the waitlist for the Everything Bookkeeping community. I have my shirt on right here. This community is starting soon to help bookkeepers from the basics all the way through growing their business, understanding accounting principles. It's also great for people that are already bookkeepers for the community that it provides and some of the resources and support.
Accounts payable, the basics. Accounts payable truly means the money that a business is paying out to vendors. So you need to think of this term as the money that's leaving the business and going out to vendors. You, as their bookkeeper, are responsible for tracking these transactions from the moment the money is expected to go out to when it actually does and when it leaves the bank account. But we've got some important vocabulary that we need to go over. And first is the word vendor. So vendor is a person or a business that supplies goods or services to a company. You might also hear these called a supplier. So your business is going to pay for goods or services from other companies in order to provide a good or service itself. So some examples would be Lowe's. Maybe your business is buying items from Lowe's in order to make a product or deliver a service to one of your customers or clients. Well, then Lowe's would be considered a supplier or a vendor for your company, and you are going to need to pay money out to Lowe's. QuickBooks would be another example of a vendor. QuickBooks supplies a software to your business so that you can handle your accounting. But QuickBooks would be a vendor that you would then pay for that service and that software. Even simpler than that would be a gas station. If your business is on the go and then therefore stops at a gas station, that would be a vendor that you are paying money out to. To the side here, I also have the vocabulary of an invoice and a statement. This is sometimes can be very a basic confusion for people that are new into bookkeeping. And every once in a while, an invoice and a statement can be confused as you're receiving it from a business, from a vendor. But an invoice is a document stating the specific good or service provided on a very specific date. But it may not need to be paid right away, as invoices are generally collected into a statement. Statement down below says a document stating a list of the invoices for a given time period with a total amount due on a specific date. So what you need to understand is that your business may be collecting invoices, but then at the end of that billing period, then a statement would be received that then lists those invoices that you've received in a given total so that you're not paying out each individual invoice, but rather a statement at the end of the billing cycle. And then that would have the total due on a specific date. Generally, the term is about 15 or 30 days, depending on what your vendor has set as their billing cycle. So let's go through the timeline of accounts payable and how you're going to process things as a bookkeeper. So the first thing is that the business orders a service or product from a vendor. They go to Lowe's, they go to the gas station, they sign up for their QuickBooks subscription. So they've ordered a service or product, and then to the right, you're going to receive an invoice detailing the product or service your business received on that specific date. But as we've discussed, then you are going to also receive a statement detailing the invoices that you've received prior being billed at the end of that billing cycle. Again, this may come in the form of mail, or it may be emailed to you, or you may have an online portal where you can see those statements for that specific period of time. But down below, then the business needs to pay that statement total. They need to, pay that bill. And so then you pay the statement total and mark it as paid in the accounting software. But there's something very specific that you need to kind of think about as a bookkeeper is that you need to make sure that once you've paid that bill that it actually comes out of the correct account and that the vendor received the payment so that it's accurately marked as paid in their software. If it's not, if there's a discrepancy, then the business could incur late fees because of misunderstanding of payment. This could also happen if a check is bounced. You wrote the check, however, the funds were not available. There were insufficient funds in the account. And then you're going to have to follow up with potentially a late fee and a overdraft fee from your bank. So this is where accounting is not as straightforward if you don't have all of the information at your fingertips to know that it accurately has left your bank account for the business and then been marked as paid in your vendor's accounts. So let's go through some examples. I really like to give you guys hands-on examples of how I've seen these things used. So accounts payable, I have two examples for. The first example is accounts payable for the property management company that I work for. And the accounting software that they use is Propertyware. So here's just one example of accounts payable used within this business. So the business has a mortgage payment. They have many mortgage payments on their rental property. So the business receives a mortgage statement. It becomes available. I have several different types of mortgage statements that this business, several different ways that I get this statement. I have some that are emailed directly to me. I have some that are just an online. I have to go to their bank account. Let's say it's BB&T has a mortgage statement. I have to go to BB&T to actually access that statement. And some of them are physically mailed in to the business. But however I receive them, then once that bill comes to me, I need to enter it into Propertyware. I need to enter it into the system as a bill that the business has incurred. And I'm going to mark the vendor name, and I'm going to mark the date that the statement came in on, the date the statement is due. All of those information and those details needs to go into Propertyware. And then the payment actually needs to be made. So I've marked that the bill came in, but now I need to make the payment. And that happens in a variety of different ways. Very often, if there's an online portal, then I'm going to go there and pay it through the online portal for BB&T or for Bank of America. But sometimes it's going to be a bank bill pay. It's going to be scheduled through my bank account or through the business bank account. And then other times it's a check that's going to be mailed. It's going to be printed out, signed, and mailed out to that vendor. But any way that I make that payment, once the payment is made, then I need to go back to the system and I need to bill is marked paid in the system. So I need to go into Propertyware and say, I paid it on this date. Here's the way that I paid it, and close that the bill has been paid. During the reconciliation, I need to make sure that the bill and the bank record of the payment are matched. And this is where it's important to make sure that the check or the payment has cleared the bank account so that I know that it has actually been paid. So this is where reconciliation is really, really, really important. But I did want to give just kind of a quick screenshot of what that looks like in Propertyware. Obviously very different and very specific niche for property management businesses. So not all bookkeepers are going to be using this system. Many of them don't and would have no reason for their clients to use Propertyware. But in Propertyware, this is what it looks like. There is a bill. You'll see the bill number that was created at the top, number 6204, and it's also been marked paid. So very often, and QuickBooks will do this too. You create the bill, but it won't say paid next to it. It won't say paid on top of it until it's been paid. And then at the same time, I can view the bill and that it's been paid at in sync with each other. But it's going to have lots of information here, including the vendor, City National Bank, a reference number where I list the last four of the account that I paid or that the bill came in from, the statement came for, and then the month that that statement was for. The bill date of when the statement says the bill date was, and then the due date of that bill. The terms that it's paid within, that's a 30-day time period for what the bill is associated with. And then down below, this is important that you understand where this says portfolio building. So, very often, what your client is going to need you to do as a bookkeeper is note what this bill is for. Obviously, you need to know that it was a mortgage payment, but if they have multiple mortgage payments, what portfolio, what building was this specifically for? In QuickBooks, this is referred to as a class. So your customer or your client might need you to attach certain expenses to a certain project. And so that's something where you can really help be efficient in your bookkeeping with your customers. But so this was attached to Peavine Lane, which is one of the many properties that have a expense. So Peavine Lane was selected as the portfolio, and then the mortgage payment was actually broken down into the principal amount and the interest payment that occurred. And so that is why this bill has been split into two different amounts that total 27, 27, 26. Down below, you will see the payment that's attached to this bill, the date it was paid from, that's the account number that it was paid from, and that it was a bank bill pay, and the amount in total. Let's move on to our second example of accounts payable. This is accounts payable for the farm business that I work for, and their accounting software is QuickBooks Desktop. So the example here is that my the business and the business owner and his employees buy repair supplies from an auto parts store. So this is important to note that sometimes it happens this way and sometimes it doesn't, depending on the business setup that you're working with, that this business owner has opened an account with a vendor, the vendor being the auto parts store. And so every time that the business employees or the owner buys supplies needed for repairs at the auto parts store, they are not actually they're not paying any money when they go in. They're saying, I need to buy it on this account. And then they pay no money. They just leave with a receipt. So they're going to bring that receipt or that invoice back to me. And I'm going to enter it with the accompanying details of what it was paid for, if it was attached to a specific project. But I'm not going to actually pay it that day. I'm just going to enter it as an invoice into QuickBooks Desktop. And then that process is going to repeat. So the process repeats however many times they happen to need to buy supplies at that auto parts store. And then at the end of their billing cycle, the auto parts store is going to mail or email me a statement. This is when money is expected to start to be, processed. So the statement is entered by selecting the open invoices received during that month. All those different invoices that I've received, those receipts that I've received throughout the month, I'm going to select that those are needing to be paid. And then I'm going to make that payment. And again, this could be in a variety of different ways, but the payment needs to be made. And then that bill needs to be marked as paid in QuickBooks Desktop. Again, making sure that the payment leaves the bank account. So these were two different examples of accounts payable in bookkeeping. I really hope that it's been useful. If you have further questions or something that you feel like I glossed over, let me know. This is, again, just the basics of bookkeeping, and I hope that it has been helpful.